Well. CPI coming in fresh. Rate cuts in June. That's the story right now. That's what investors are betting on right now. We've had some very good data regarding the CPI. Much lower than what they expected. Problem is, we've still got trade war jitters. Now, before you start coming at me with the old, stop being negative, let's just pump Bitcoin to the moon. Let's just work with what we know. We know we still got the problem with tariffs, okay? So we know that there's going to be a lot of back and forth with that. I don't know if any of you watched it this morning on Sky News, where one of the Sky reporters was asking, Peter, I think it was, and he was saying to him, stop with that nonsense and everything. He kept really asking him the questions. When is Trump actually going to come through with these tariffs? Why is he changing his mind all the time? It's not looking good for Trump if he's saying he's going to do one thing and then doing the other. The market is reacting to it pretty aggressively, and it's like they're trying to dismiss the market has effectively corrected. In essence, it's crashed. I mean, it's not that much of a crash, but it's taken a nice little bleed to the downside. Now, with that being said, we can go into the chart and say, okay, then, is the CPI data, or should I say this move with Bitcoin, is it truly the move that we're looking for? Or is it going to be a false move? In other words, are they going to bring it back down again? By the time we're done with this live, you should have a good understanding of what to expect heading into the rest of the day, because we've yet to get the New York reaction. By the way, ladies and gentlemen, my eyes are actually fried, and I've got to wear these. These are my shades that I've got to wear right now, because I can't even look at this camera without this wild selfie light smacking me in the face, and it's just burning my eyes. So if you like them, you like them. If you don't worry. We're here to talk charts. Let's get with the program, ladies and gentlemen, break it all down. So stocks storm back up after US inflation surprise. Let's get with the program and understand where the data is. So 0.2 on the core CPI. That's great news. Great news. Okay. Dollar down, yields down, bonds are up, yen up, euro should have been up. Well, it did go up, and it's come straight back down again. Remember, euro is very extended. Year on year CPI 2.8%. Now, if we just go into the data itself and understand where we are with that, it's not the first time that it's come to 2.8%. If anything, it was down at 2.7% in December. November, it was at 2.6. The lowest it got to in October was 2.4. And then from that point, it's just been fluctuating up and down. So is it a fantastic reading on CPI? Not necessarily, but it's much better than what we were expecting. Okay. So when we look at that, we think to ourselves, all right, are we on the trajectory to see inflation going down further? Well, tomorrow, Thursday's core PPI data is going to also reveal to us what are the cost of goods and services. Okay, so this is effectively the finished goods and services sold by producers, excluding food and energy. Okay, so if we do see a reduction in that, then of course prices will then reflect that inflation's coming down, but also at the same time it will reflect what people are doing. If people aren't really going out and spending money, then that obviously means manufacturers are actually reducing the goods and services cost to encourage people to spend money. That's naturally going to give the Fed a reason to believe we need to cut the interest rates, so that once we get the rate cut, then it's going to be much easier for us to understand why Bitcoin could actually move up a bit more and keep on going higher, because it's going to be cheaper to do business. Fundamentally, has the market actually priced in a Fed pivot? Well, when you go into the charts, you can see right now, Bitcoin has made a nice little move to the upside. It's swept this previous liquidity, gone back into this vector candle zone. But now we've got this candlestick right here, which isn't really giving us a good view of it. It's moved up, but now it's starting to come back down again. We go over to the stock market itself, and you can see the NASDAQ has made a nice little move to the upside. It is up 1.58%, but that too is also coming back, and it looks like it's come back into this vector candle recovery point. Now we really need to see if the proof is in the pudding that investors are really happy with this data. But what we've got to look at is, are the expectations to cut rates in June something on the table? Well, when we go over to the actual CME reading here, you can see that that has stayed as it is. They're due to update it, but I keep refreshing the chart, and it's not actually being updated just yet. Okay, so probably by the market open, they'll give us another reading to suggest that if they are expecting the rates to be cut in June, then that means this 97% will go over to here, and there'll be an expectation of them cutting the rates between 4 and 4.25%, because this chart right here shows you 4.25, 4.5%. The actual reading itself is around 4.33%. So it's within that price range. If we do get the 25 basis point cut, that will take us down to, well, between 4 and 4.25% based on these levels that we've got. Because if it's at 4.33%, then it's going to be closer towards 4 to 4.25. That's where we are with that. Now, going into other assets, the dollar dominance, the dollar has spiked up. Now, the dollar is very, very oversold inside of these range. They came down to then instantly come back up again. So that's a little bit of a problem for us. Now, we know that the euro itself is trading very, very aggressively to the upside. It's marked up to only come back down. They say that the first move is the false move with the news. So we're really looking to see if the euro can actually sustain itself within these ranges and continue its trajectory to the upside. Okay? More importantly, guys, we're going over into the bonds market. That's going to give us a good idea as well where we are. The yields have shot up to 3.99%. Why is that the case? Why have the yields shot up if what we've got is good news? Now, this is where you start to understand why you need to follow the money, follow the big money, okay? If the yields go down, that means the stock market is optimistic about things. We've had a dovish scenario. Think about it. Inflation has come in lower. Fundamentally, dollar down, yields go down, bonds go up. Stock market up. That's not what's happened. We're seeing the yields right now trying to climb higher. That's the 2-year. Going into the 10-year, you can see it's going up 4.328%. So there is still the expectation that the market might not actually be happy with this result. We're only going to know once we do actually get the reading from how the market translates it, because that market's going to open in the next 20 minutes. And when the market opens, we're going to see truly if investors are actually pumped about this. Otherwise, what you've just witnessed is effectively a pump and then a dump that could precede it. Okay? It's good news. Inflation is down, but we don't know if they really think it's good news, because trade war is only going to bring inflation back up again. So if we know where we stand with inflation, okay, statistically, it's come down. But if there is the expectation that there's going to be a trade war coming into play, we might have ourselves a little bit of a problem with Bitcoin. Bitcoin could effectively roll over. Now, going into the order flow to understand where we are, you can see lots of traders were liquidated just a few moments ago, and there is effectively short liquidations around the 84,350, or just slightly below the 85K zone. Has Bitcoin taken that? Not quite, okay, 85. So it's nearly tried to, and this could have been the liquidation point. Let me just refresh this again. Go over to that just to put it into perspective for you, because this is on the weekly time frame itself. I mean, the markets are moving pretty aggressively right now, just having a look at it. Okay, so refresh that. Come on. Come on. All right, give me the 3 days. Yeah, okay, there you go. So you can see, oh, what the hell? There we go. So you can see they've actually come up and cleared that liquidity, all right, at the 84 zone. So shorts have been liquidated, all right? Retail is now coming in and buying the Bitcoin. Going into it, you can see that we've got quite a few guys coming into the offer side. But the problem that I've got, guys, still is the fact that you've still got these bids down here. And if there is those bids in that range, that tells me there's a commitment that someone wants to start buying Bitcoin. The market will follow that narrative and go towards that. It only makes sense that prices should be appreciating. But the problem we've got is the yields are moving up. That's not a good sign. The yields should be moving down because investors should be going into the bonds market. Now, going into the bonds market, you can see that's down 0.229%. Hold on a second. When the data came out, it was good and it pumped. Now it's coming back down. So it's telling you that this might not be as good as they're making it out to be. Yeah, it's a hot reading. You go into it. Look, man, it's stock storming after US inflation, but it's not really giving us the true move here, okay? Going back into it. Bitcoin, all right, now on the daily time frame is going to help us understand where we are, okay? It's swept this area here. Now, if Bitcoin is truly going to finalize and show that investors are actually optimistic about things, this candlestick by the end of today must get above that 84,200 region. Okay, 84,983. because then that would lead us towards the whole number of 85. Then that will take us towards the 86,500. That should then take us towards the 200 EMA right there. We need to break that 200 EMA. If we can't sustain that 200 EMA, then we've got ourselves a bit of a pickle. Okay? Now, going into it all, ladies and gentlemen, to go to the actual Arkham to understand what's going on in that sense, you can see here, we're going down on the ETF balance, all right? So investors are starting to offload. BlackRock has done 3 hours ago, offloaded 3, 6. Well, that was a bit bizarre. 3, 6, 9, 12, 15, 18 again, 1,800 Bitcoin. Valkyrie starting to get rid of Bitcoin. Yesterday, Fidelity got rid of quite a bit of Bitcoin. So it looks like there's outflows on the actual ETF, and that's not looking good. I mean, if we actually look at the numbers, we've got 2, 4, 6, 8, 10, 2, 4, 6, that's 100 million there. There's about 3, as we go into it from yesterday as well, we got nearly $400 million worth of the outflows, and the market is yet to open, okay? So is this a sell the news event? That's what we're looking for. So when you're going into the markets today, guys, and you're trying to work out if now's the time to buy Bitcoin, my opinion would say that you really want to just wait until this daily candle closes positively, because it's the first time now it's getting above the 5 EMA on the daily time frame. So it's the first time it's managing to try and close above that, because all we've had is price closing below that, which gives us the idea that prices are going lower. Problem is, this is the first time it's now managed to get above that, and it needs to stay above this 5 EMA, which effectively means that it needs to stay above 83,000 for us to sustain the idea it's going to continue higher. Okay, what do I think is going to happen? Purely off the idea that the yields themselves aren't really going up. Sorry, the bond market isn't going up, suggesting that investors are liking what they're seeing right now. That could mean that there's a little bit of a pessimism going into the marketplace. Going into the volatility index, it has come down. Go into it on the day-to-day basis, you can see the volatility index has come back down ever so slightly, but you've got red vector candles right here, which could suggest that the VIX is going to reverse back up, which naturally means that the market could actually turn down, okay? So investors, again, they're still concerned about the trade wars and the tariffs that are being rolled out. CPI was great. If we didn't have tariffs, we would have no reason but to just go all long on Bitcoin. But the tariffs are causing a problem for investors, because even though inflation is down, the tariffs will be another reason for it to go back up again. You've got a relatively decent labor market in the sense where it is starting to show weakness, but yesterday's reading came in and showed that job openings, there's more jobs available. So the Fed now realistically can say, okay, then if we keep the interest rates as they are right now for the time being, let's just wait to see how the labor market's going to work. Because remember, before the subprime mortgage crisis that happened back in 2007, 2008, the yields, the actual market itself was trading at significant highs, but more importantly, we had an unemployment rate of 6.5%, okay? So, and that was where the interest rates were at 5%, okay? When the Fed decides to pivot from that point, then you get the idea of the subprime mortgage crisis. There was a complete reset, okay? So you've got to really just factor it in and say to yourself, is this a sell the news event? Remember what I said yesterday, everyone is actually short term. That means they're quickly trying to get their money in and get their money out, because we're in a corrective move. And if you do see rallies, make sure you sell them. In other words, when price is going down, okay, it starts to come up and you've been building longs, sell these rallies, okay, because it could be on the way back down again, okay? Does that make sense, ladies and gentlemen? I'm seeing it all day, right? I'm seeing all of it. I'm seeing all of you saying, okay, so here we go. I got a very good point here. You need to separate inflation and tariffs because they are not the same thing. Inflation is only made by the government by printing money. Correct. It is made by the government printing money, but you've got a credit crisis. That's why the tariffs are coming into play, because they need to raise money. You've got a restructuring of $9.5 trillion US debt. Where are they going to get the money from? The debt ceiling. They're already talking about trying to lift that. Yellen's talking about it. Okay, we're not talking about the debt ceiling now, are we? But if we do go into the restructuring of that $9.7 trillion worth of debt, okay, what's going to happen? If they can't pay it, what they're going to do, they're going to print, which is naturally going to lead inflation higher. But if there is an expectation that the economy is slowing down, producers technically would want to try and increase the rates of their goods just so that they can keep things aligned. Now, I'm in agreement with you that when you print money, it creates inflation. But there are also factors that are going to keep inflation high. Okay? Because people still spending money, you know? They are consuming credit. Whether they pay it back or not is a different story. But you've got a valid point. Inflation is separate to tariffs, but the impact of tariffs is going to push people. It's going to lead companies. They're going to increase the cost of their goods. They are. If you've got tariffs coming from one end and then tariffs going from somewhere else, then you've got trade war. That's going to be a problem for people. And companies are going to see that. They're not going to reduce the cost of their goods when you get a tariff. Hell no. It's costing them more. So then you're obviously going to have either a wage inflation or cost of goods inflation. That's what we're looking at. That's why we have the CPI, the core CPI, and then the year-on-year CPI. You know what? Someone was talking yesterday about economics, okay? And I was saying to myself, where do we apply economic theories? As much as we know that inflation is tied to the idea that when you print money, it inflates the value X, Y, and Z. I get all of that, okay? So then how is it that the euro has shot up? Their inflation is relatively well. They've cut their interest rates. That means you don't earn a yield on the euro because there's no point in holding it because you're not getting anything on the yield because your interest rates are low. So why on earth has the euro shot up? Again, that's because there's money going into spending. So they're printing more money. Again, confirms the idea that, yeah, inflation is caused by government printing. But when you're applying that economic policy or that theory about yields going up or down, which negatively and positively impacts the currency, then you think to yourself, well, euro technically shouldn't be going up because its yields are low. So there's no interest in it. It should be in the dollar because the yield on the dollar is high. So that's where investors are going to go. Why? Because you get 4.2% on the 10-year and you get nearly 4% on the 2-year. So that's where the yield is. Why? Because the interest rate's high. So when you're trying to apply economic theories, clear as day, it's not making sense because when the volatility index doesn't make sense to anyone anymore, and then all of a sudden it does, theorists are like, damn, you know, it's a little bit tricky. You had the recession reading coming into play. And they were like, we're going into a recession, and then no one spoke about the recession. You've got the idea of the Fed pivoting. When the Fed pivots, the market crashes. Nope, it just shot up. There was dismissal on that. So things aren't behaving the way they should be when it comes to applying economic theories into the reality of what the market really does. And because we've got the luxury of so many ways of being able to hedge ourselves and move money left, right, and center, kind of contradicts all of the economic theories. I might be completely wrong, ladies and gentlemen, but that fundamentally is the truth, you know? Oh, what a guy, Evergreens. This guy thinks he's so cool. I don't think I'm cool. What the hell's wrong with you? And why does he talk like we're dumb when chances are most of his audience makes more money than him? What tone of voice? Where are you going? Listen, brother, I'm Greek. This is how I speak. I've got that tone. I share my insights on the marketplace. Doesn't matter if you like it or you don't. You're worrying about my tone? Forgive me. Put subtitles on. That way you can't have a tone. And if no one likes what I'm saying, then fine. What can I say? Mad love and respect to everyone. Not no pink eye, bro. It's just too bright for me. My eyes are fried from the lights. That's why I've got this. You know? What a guy. That sort of thing, you know what? That sort of thing is irrelevant anyways. Like, why? You know, you're concerned. Nah, I'm not going to give weight to it. I'm not going to give weight to it. Anyways, any questions? Look, guys, don't worry about it, man. It's all good. Any questions, guys? Doesn't this price action look like Tansiki's? What a guy. Yeah, I do get triggered, man. I get very triggered, and I shouldn't. Yeah, I don't know. Yeah, yeah. Never mind. Any questions? Any questions? Yorgos. That's so bad. Gold is melting. That explains it. Yeah, gold is melting. When we look at the idea of gold, you can see that, where is it? Here we go. Gold is coming down because then that could effectively mean that investors don't think that the interest rates could actually get cut. They're looking at it thinking, all right, yeah, your inflation's down, but trade wars and what have you are going to be a problem for us. Okay. So they think maybe we're not going to cut the interest rates later on. Gold is going down. Alternatively, it could be the reason that they could be getting ready to hedge gold and get ready for a move up with the later expectation of interest rates being cut, you know? Yeah, I do care about my audience. Yeah, I do. And what I really want to say, I'm not going to say it just for just to be polite, ladies and gentlemen, because I know you all know what I really want to say. How about you all say it for me in the chat to save me saying it? Because there could be children watching this, and I know I'm a little bit prolific with my wordage, but I will say what I really want to say because I'm just there right now with it. He might be caught on the wrong end of the stick with me today, but never mind. Tina, do you have a macro outlook in Bitcoin or in dead cat territory? Okay, dead cat bounce territory. Look at this. This green vector candle recovery. Anytime we've had good data that's come out, Bitcoin has moved aggressively away from it. To only come back into that range tells me that investors aren't really down with the flavor. Okay, so we would have to see certain things coming into play to suggest that that's going to be the case. And in 3 minutes' time, we are going to know. Tino, what's your thoughts about commodity-based and mining-based stocks within a tariff environment? Great question. So, of course, steel and aluminium, you know, that's going to be one. If you were looking at steel stocks yesterday, they were loving life with all of this. And that's where Trump is really going with these tariffs. So, what you really want to be doing now is you want to be looking at when it comes to commodities. Gold is now seen as a safe haven, all right? So when you do get involved in mining companies for commodities like gold and oil, granted, okay, we've just had OPEC talking just recently as well, and you can see that oil's price itself is just taking a smack. It's down to 67, all right, and it's trading sideways, being very, very tricky. But Trump wants to get it down to $50 a barrel. Do I think it's going to go there? Well, economically speaking, if there is a trade war, then oil will shoot up. And if there is pressure from Canada, from China, and it all starts to come into play, then that is naturally going to lead oil's price to go up, okay? But I think the tariffs for China is, in essence, a blessing in disguise, because if they can put tariffs on their products to anyone in the US, then they're offsetting the fact that their economy is doing bad. But remember, as the guy said today on Sky News, it's a negotiation tool. Well, why make a big song and dance about it actually trying to come into play and save the dollar and what have you? And all this money that you're going to be raising and saving for the United States, and that the US itself has been taking the mickey out of quite some time right now, why would you not follow through with it? So China's called the bluff, Canada's called the bluff. And if that comes into play, remember, when China's working and their economy's doing good, oil's price goes up. Doesn't look like they're doing too good. So in essence, tariffs from China will be a blessing for them, because at least they're going to generate some income from it. That's the truth. That's all good. I need Trump to weaken the dollar, inflation to come down a bit, and Powell to begin cutting rates. That's exactly what we're looking at. Bitcoin weekly touched the 50 EMA very well. So boom from here. So bottom from here. Well, look, it's... If I just go over to Bitcoin right now, okay? The weekly time frames touch the 50 EMA, correct, okay? But you haven't, even if you were to take the midpoint of a candlestick range, okay? Oh God, what's going on here? If you take the midpoint of that, all right, it has to at least succeed the 86,455 to confirm a valid test of the 50 EMA from a structural perspective, okay? What about from a value perspective? Is Bitcoin at the point where sentiment is suggesting that it's good to buy? Where is sentiment right now? You've had one of the most aggressive closes in a week, right? That is an aggressive down close on Bitcoin. Naturally, it's a relief rally to then try and bring it back down again. That's what I think is going to happen with Bitcoin, ladies and gentlemen. And it might not be something you want to hear, but logic says that your CPI data should have come through. Hopefully the market opens now. It should go up. It should. But look, it's just come up into this imbalance, and there's nothing else for it to go back into in terms of a recovery. The nearest zones are up here. So you really need to see the conviction on Bitcoin. It has to get above 84,983 to really suggest the idea that we could see Bitcoin do a relief rally, dead cat bounce kind of story. Okay. Do you think there is any way we can see the Bitcoin dominance going down at some point, or do you think it will stay at high levels for a long time? I've said it, Bitcoin dominance, it's going up. It's going to keep going up. I think the dominance of Bitcoin will continue. It's clearly getting up towards this vector candle wick right here. And then we've got the daily time frame. I'm looking at euro. It's trading sideways as well. It's not really doing much. Yeah, this wick right here on the dominance. Actually, is it the 4-hour time frame? Let me put it into perspective. No, is it the 1 hour? I think it's the 1 hour. Yes, there is a 1 hour candle vector wick. Where is it? There was a violet vector candle here. It must be on the actual Bitcoin chart itself. Well, anyway, there is the vector candle region in that zone, and that's why the 63.30 is actually highlighted. Wait a second. Let me just see. Why have I got it highlighted? I know there is a candlestick there. Is it? Is it the 15-minute chart? Has to be. I don't know where I saw that. Is it the 8-hour chart? Oh, come on. Where did I see it? There was a candlestick there, which is where my logic is of price going towards the 63.30. I think they are really going to send it up towards that point. Okay. Anything else, guys? Anything else? Tino, when to buy real gold? Great question. When do you buy real gold? You don't buy at these premiums because you get mugged off. When we say buy real gold, don't go and buy chains and gold watches. Don't even do that. All right. Go and get yourself some sovereign coins, something like that. Full sovereign, not half. All right. There's no point in half. Okay. But get yourself full sovereign gold coins. All right. And just collect them. Collect them like Pokemon Go. Just collect them as much as you can. All right. A few weeks ago, it was around about 512 pounds for a full sovereign gold coin. Okay, then I get the phone call and they tell me now it's at 672. Okay, so it's obviously increasing. Okay, and you get yourself a 100 grams. Yeah, I mean, how much was that? 500 grams of it was about 30 grand, 31,000, something in that region, about 35k ish. Okay, so Costco's a good spot to go and pick up the gold, if I'm honest with you. Go to Costco. Why? They sold $100 million worth of gold, okay? Across the company, they sold $100 million worth of gold in their wholesale stores. Can you believe that? Absolutely wild. Fractional ounces are good as well. Yeah, they're good. Do you think we'll break 120k until May? Well, look, man, look, we don't know why. Look, people need to avoid taking a price point, okay, and thinking that it has to be done within a period of time. There is none like that. Look at it on what's going on. Who's buying? Who's selling? What are they doing? Are people buying the Bitcoin? Smart-wise, yes, they are. Because look, the bids are there, okay? Retail's buying it, but you can tell retail isn't buying it as much because they're not really coming in. They're seeing one good candle and then they go in and they're like, oh my God, it's going down again. And they effectively wet the bed, you know? So when you've got such an aggressive amount of bids below this area here, all right, it shows you that sentiment favors lower prices on Bitcoin, all right? So just take your time with the bottom as such, okay? There's nothing to start getting excited about until Bitcoin can even break above the 50 EMA on the daily time frame. If it doesn't even do that, why are you even looking for anything? Because until it shows that commitment, okay, then there will be a general prospectus that everyone's expecting it to continue higher. That will fuel the retail trader to come in and buy Bitcoin, and it will encourage the guys who have been buying it on the bid side to sell it as it goes higher. Doesn't look like we're seeing that just yet. It's going to happen. but we're waiting for the point of value. If the ETF is offloading as well, okay, that's going to create concern amongst investors. They're going to get out of their exposure. You've had your CPI data come out and the market hasn't reacted properly to it. Let's just go and have a look now at the NASDAQ. How's the NASDAQ faring? Okay, NASDAQ's doing very, very well right now. You can see it's climbing up, okay? It's doing very, very well. It is climbing up, but you've got green vectors and you've got some imbalances down here. It's not really making the move, but fundamentally, it's trading positive for the day, all right? Trump comes out and says, yeah, we're going to do a tariff. It all rolls over again. So just take your time with it. The day's close will give you the proof as to whether or not this is going to be a valid move and that they are happy with the readings from inflation. Use the daily candle close and it will give you absolutely everything, okay? Any other questions, guys? Anyone that is new to the system, anybody new here, please type 1. If you're wondering what this system is, it's the hybrid system, all right? And there is a free course that you can take on the Traders Reality website very shortly. It will appear. Do it, okay? So we're talking about, this is talking about the patterns, okay? But the course content itself is great for absolutely anyone who wants to learn about the hybrid system. Click that and it will take you to it right there. Okay, it's a free system. Just check it out. You go through these modules. Happy days. Okay, type 1 if you're new. Happy days. Welcome aboard, guys. This is the hybrid system. It's free to download. And on this channel, we talk about it every single day and how we use it in terms of green vectors, the moving averages and key levels and what have you. And then, of course, if you want more on it and how to apply it, become a platinum member where you get trade setups, which is what I'm about to do right now, and give everybody my expectation of what to expect in the day. And again, we're focusing on the Brinks box right now, and that's checklist part 8. So there's going to be factors from that we're going to take so I can aid everyone in a setup for the day on what Bitcoin's going to do next, and Euro and NASDAQ and gold and Ethereum and Solana. Okay, so all of that is in the description for anybody new, but I really do recommend you do the breaking down the hybrid system course first so you have an understanding of what's going on, because the guys in the Discord in the platinum membership, they are really sophisticated traders of the hybrid system, and most of the value is in there as well in the Discord. Everyone's bouncing off each other. All right, cool. Other than that, ladies and gentlemen, mad love and respect. I hope that makes sense to you. NASDAQ's just spiked down quickly. That's not looking good, but I'll be tuning into you all later on. If you've made money on this move, pay yourself. All right.